Hey, good morning. I just wanted to put together a quick video on some important one important topic, actually really one important topic that um, has helped me start making money trading the market, and that is number one, trade with the trend. Um, I can't express how important this is, and I'm gonna just give you a quick example of why this is important and how this can be applied. All right, so what I've done here is I've just highlighted three of the important moving averages. Let me just change this. Obviously here you see the 200 moving average, 100 moving average, and the 50 moving average. And what is that telling you? Well, that's telling you that the price is moving up. 50 is above the 100 and the 100 is above the 200 moving average. And that means that the bulls are in power and they want to press the price up. So we want to find a trade that that is confluent or consistent with moving in with the trend. How would you do that? Well, one of the ways to do that is look for a retracement into the zone. Obviously the guy was talking about AVZ zone, and that is in between these moving averages, there's a zone. That zone acts as a attractor and resistor. So in this example here, you see a price being attracted back to this zone in between the 50 and the 100, and then when it gets in there, it resists. So that's an important concept. Most of the time, price is moving in relationship to this zone, but that still is a missing piece there. And what we're going to do is pull over the 15-minute chart, and I'm going to show you where exactly do these players play and why they play there. Okay, this is a 15-minute chart. Each bar is representative of 15 minutes of time. And one of the things I want to show you is this line right here, these green lines. Let's see, right here's one. Sorry. Okay, here's one. Here's a green line. Here's a green line. And that is called the previous high of day. And that is abbreviated PHOD, previous high of day. And you can see there's one there, there's one there, there's one here. They tend to cluster around each other, and that's important. We'll talk about that in a minute. And if you look down here, move some of these lines out the way. This is the red lines are previous low of day, and we abbreviate that PLOD, previous low of day. And what that means is that this is the representative price of the lowest price of the previous day. So as you can see right here, at 41.10, that is the lowest point of the previous day. All right, that's important. And so what we're going to do is I'm going to show you a few of those. There's one here, there's one here, there's one here. And why is this important? Because first of all, buyers and sellers place orders at these levels. And two, they represent places where price is maxed out, where buyers are exhausted and where sellers are exhausted, and hence you can kind of time your entries around that. Plus they act as support and resistance. So what I'm going to show you here is that what we're going to do is just take two levels. We're going to place a green line on the previous high day from yesterday, and we're going to place a green line on the previous high day from day before yesterday. We're going to place a red line on previous lower day from yesterday, and one on the day before that. Okay. Now what I'm going to do next is I'm going to pull over the 60-minute chart, and you'll be able to see how important these lines are. They tend to play these over and over and over again. An example here is, here you see previous high day acting as resistance, and here that resistance level was broken and it acted as support. But it happens over and over and over, and you can use this strategically in your trades. So I'm going to pull over the 60-minute chart and show you exactly how this plays out. Okay, here we are back at the 60-minute chart, and these are our lines that we just drew, the two previous high day prices. And as you can see, this lower one acted as resistance on several trades. This one, and this one. Now each of those entries could have been easily $1,000 profit entries. Okay, and then what you see here is that this support level was broken, retraced, and acted as support. And from there, it acted as support twice at this level and right here. So what we're doing, I'm going to show you what I did Friday. First, I just want to pull over the chart a little bit more. We're going way back to last month. You can see how even that level held up as support here, broken through, and then acted as resistance and continued downward. And here, the previous lower day acted as resistance, broken through, came back, acted as support right there. So these levels play out over again, over and over. And here's with support, and as well as here it's support. So you want to keep these on your chart because most likely they're going to play out again. But what I want to show you is the trade from Saturday, or from Friday. And it was this entry right here. We were coming in at about 7 o'clock, and I knew that this was a previous higher day resistance level. It was broken. This was a retracement. This was the zone, the 50 MA, the 100 MA, and I placed the entry right there to buy. And I'm going to show you how that turned out. So this is where my stop was, right below that entry, those wicks right there, right below those wicks. And this was a $1,170 profit that resulted from a bounce off of the support level. And that's giving you an example of what I did. One, I traded with the direction. All right, I waited for the price to come back to retrace to that zone. And then I found a level and I traded off the level, going in the direction of the trend. So that is a very simple, effective way that you can find trades and place your trades and time your trades. You don't have to always be in the market, and you shouldn't be. This is a great way to stay out of the market when you have to stay out, and know when you should be thinking about getting in. Okay, talk to you later.